fewer technical patterns this week, but in these few there are some gems, some really interesting ones. So we had a weekly key reversal down in US dollar against the Indian rupee last week that has transferred to what looks like a major move lower this week. You see, the main pattern since about mid-September has been an ascending expanding wedge pattern. This has looked like a good pattern, though it has not quite managed the required combined 5 touches of the upper and lower trend lines, currently 82.41 to 84.35. However, today we've had a break below the lower trend line, thus potentially setting up targets on the downside, assuming this is of course not a false break lower. Thus, we would have a primary target X in the 80.90 area, with a secondary harder to reach target X1 in the 80.28 area. The immediate obstacles on the way down are the very recent 50% Fibonacci line at 81.13, plus the rising short medium moving and the medium moving averages, currently 80.78 and 79.99 respectively. We also had a weekly key reversal down last week in the Chinese yuan against the Japanese yen cross. However, there has been no follow through lower in this pair this week, just some loitering around last Friday's close. Additionally, we had a weekly key reversal down in US dollar Mexican peso last week. This has seen a limited move lower, but there is a much larger pattern at work here that is important to recognize. You see, we have a crossover imminent of the broken upper tine, currently 1984.03, of the March to July bearish Andrews pitchfork, with the middle tine, currently 1982.18, of the shallower bearish shift pitchfork for the same move. I've been shouting on about this crossover now for weeks. You can see it circled in red on my daily chart. What is also interesting is how the market action has become attracted to it as well. So, what can be expected at or soon after the crossover this coming Friday the 28th? Well, you can expect one or more of the following: a change in trend, a reinforcement of an existing trend, and or volatility. This is one to watch now. The final currency pair is a currency cross, a weekly key reversal up in euro against the Swedish krona, which has seen no follow through higher. Indeed, the opposite has happened, with a move down to the low of last week's range, though not as yet below it. In the commodity, we saw a weekly key reversal down in NYMEX heating oil futures, which has also seen, well, not seen any follow through lower. The market choosing instead to remain within last week's range, though around mid-range rather than to one or other end. There were notably no other crude, gasoline or gas oil futures that had any similar actions. Finally, we had a weekly key reversal up in Chicago soybean oil futures, with a reasonable follow-on higher this week. We are indeed challenging the rising long moving average, currently at 69.51 right now, and still utilizing the broken lower tine, currently at 68.91 of the December 21 to July 2022 bullish Andrews pitchfork, to do this and claw a new high, not seen here since late June. One additional point to note: we have a somewhat rare bow tie formation from the moving averages this week. This is made from the short moving average, currently at 66.68, the short medium moving average, currently 66.25, and the medium moving average, currently 66.12. For those who are interested, I will expand more on this pattern and its implications in my weekly oil, seeds and vegetable oils commentary video tomorrow. As always, I'm happy to share my videos, various charts, and answer any questions for anyone who's interested and who wishes to contact me. With that, I'll finish this section from London, and I hope you found these comments useful.